Day trading, swing trading, hodling, what is the best option for you and what is the best strategy that you should use? Well, there's a few different viewpoints on it, and it all depends on what asset classes you're trading, what type of trading lifestyle you want to have. Do you want to be looking at the chart for 3 hours a day or 1 hour a day? Do you want to be looking at the chart every day or, once every week? Or, all of these things do affect your outcome as a trader, and you can't expect to be profitable day trading if you only want to look at the chart on Fridays when volume is a lot lower and when the market is about to close. So this is some stuff you need to consider, and right now we are on my favorite Investopedia, where I'm going to explain the terminology behind the day trading, swing trading, and hodling. And then after that, I'm going to hop into the chart a little bit, do a little analysis of, the US 500, the stock market, oil prices, which are kind of volatile recently. And obviously we have Bitcoin, Ethereum, and a few Forex pairs, so I can draw a few conclusions for you guys with regards to what type of trading strategy could suit you the best. So welcome back to the Satoshi Club. If you enjoyed the video, drop a like, subscribe to the channel, drop a comment down below, and let's get straight into it with the basics of day trading, right? There was a time years ago where people were able to, only trade in the stock market and, using their brokers or financial institutions or trading houses. But, now it's all different, right? Now we have online trading everywhere. We have trading apps, we have trading platforms, we have brokers, we have crypto exchanges. Everyone is able to access the market completely online and with relatively, almost zero commissions everywhere. And this is good, right? There's a lot more traders in the market. There's especially a lot more traders ever since, this stuff happened in 2020, where a lot of people just simply started swarming onto the internet with their stimulus checks and started buying up stocks, the whole Wall Street bets craze, and then we had the crypto craze, and then it's all cool and fun to watch, but a lot of these people just lost a lot of money. Why? Because they weren't focusing on the right strategies, or they weren't objective enough. They let their emotions interfere with their decisions, or they simply did not have enough time to backtest. So day trading can actually turn into a very lucrative career if done properly, which is stuff that, I'm going to give you a few hints about during this video because I trade myself, but it's stuff that you will need a lot of time to actually get into. So if you're going to be a trader yourself, day trader or swing trader, you need to dedicate at least an hour a day to actually make it happen, right? If you're hodling, then it's a different story. You need to do some good due diligence, some good research to see when you're actually going to start buying these coins, when you're going to start dollar cost averaging, when you're going to buy these stocks or whatever. But I'm getting a bit off point right now. There are a few key factors that separate day trading from other types of trading, and that is that day traders buy and sell stocks or other assets during the trading day. So they're not trading overnight, they're not exposed to overnight spreads, they're not exposed to weekend spreads, as you will see that swing traders are exposed to, and these guys are trying to capitalize on perceived market inefficiencies. So when you see that the market, on the daily time frame is volatile, right? So this is very volatile. It's a crazy period in the past few days on the US 500 or the stock market. Why? Well, on the daily time frame, we didn't have a lot of moves, right? For example, this move right here, it was a huge pump, right? So the S&P 500 grew by, what was this, around 10% almost in one single day. But that was volatility that a lot of day traders were able to catch. But for example, with these moves right here, it's also pretty easy for day traders to catch. Why? Well, if you hop into a lower time frame, you're going to see that there is a lot of movement going on all of these times. So there's a lot of potential moves to be done during one single day and potentially to take advantage of. Now, me personally, I wouldn't be trading here because for me, this is just a zone of consolidation, and I don't like to trade within ranges. But the lower you go with a time frame, the higher probability you have of getting more and more trades in there, because simply the market is moving all the time, and every single second there's a new piece of information printed, except on the weekends when the market is closed, unless you're trading crypto, right? Because crypto is always open. So that's day trading. If you have swing trading, it's a style that attempts to capture short to medium term gains in a stock over a period of a few days to several weeks to even months. Now, I know people who swing trade based on the monthly time frame. Even if you look at the US 500, for example, on the monthly time frame, you're going to see that there is not too much info on the chart itself. It goes back from December 2014, but what you can see is that the market generally tends to go upwards, and that counts for Bitcoin as well. The market tends to move towards the upside, and currently we did form a nice zone of support, right, where the previous zone of resistance was. So this was a resistance on Bitcoin, this formed the support, but recently we started breaking down from there. Are we going to break out completely? Well, we don't know yet, because the monthly candle is closing 8 days from now. So if you were a swing trader and you're looking for the long term when it comes to Bitcoin, but you're not just simply a holder, well, you're going to be looking at this monthly candle information, and it's going to be very important for you. Now, you could look at the weekly time frame as well. We did have a strong weekly close below this area, which leads me to believe that we could see Bitcoin going down into the 10K level pretty soon. But other than that, if you are a day trader, swing trader, or whatever, you need to spot these clues. The clues are there for everyone. What I do is I'm a day trader or a swing trader, right? But I also have a little bit of funds that I hold, right? So crypto, most of it, I'm holding, right? I have a little budget that is set for trading. I have a little budget that's set for Forex, and I do all of these things. Why? It simply allows me to have a lot more opportunities in the market this way. So what we can see for Bitcoin right now is, something that looks either along the lines of a correction pattern, it's bullish, or head and shoulders pattern, which is quite bearish. And if we do break out below, we could very likely move into the 10K level and then start to slowly reverse from there. But lastly, we have hodling, right? It's buying and holding Bitcoin or other cryptocurrencies. It's everyone's favorite term in the cryptocurrency world, and it means holding on for dear life. HODL. Surging to over $950 at the beginning of December 2013, Bitcoin made a whopping 500 or something, 700% increase because, it just grew tremendously. And, people started using this term, right, from 2013. It basically means buying and holding indefinitely. It implies not selling at all. It also means, hodl on for dear life or hold on for dear life, right? And it is the core tenet of many Bitcoin and crypto believers. So how would you actually hold in the market? Well, this is the DCA strategy that I mentioned in a bunch of videos to you guys before. And if you haven't checked them out, check out all of my previous videos. I do have knowledge in every single one of them. You're going to walk out of the video with more things than you knew before entering the video. But holding, just dollar cost average, right? When you see Bitcoin falling, just buy a little bit, right? When you see it falling more, you buy a bigger chunk. When you see it falling more, you buy an even bigger chunk. Or you just, set a certain part of your income, whether that's $100 a month, $100,000 a month, $1 million a month, $10 a month, 1,000, anything. Just set aside a piece of money that you want to put into crypto, split it between 5 top coins that you like. Off the top of my head, Bitcoin, Ethereum, Anchor, Algorand, and you put it in anything else, doesn't matter. Some DeFi project, Cake, for example, it's following Binance's growth, and just put it $20 a month in each of those, and the more the market falls, the better price you're actually getting, so that when it starts increasing again, you have the most amount of profit from the lowest buy, and you've averaged out the position that was the worst and that was in the most drawdown because you were dollar cost averaging. So that's a good long-term strategy and hodl strategy. And hodling is always good when it comes to crypto because, as we've seen so far, it tends to keep going up. But the same can be said for the stock market as well. We can see on the weekly time frame, it literally tends to go up except when influenced by large major events. And if you know which events this was right here back in 2020, comment down below. So that's pretty much it for today's video. I would like to talk to you more about trading. If you just subscribe to the channel and drop a like, I would really appreciate that. But generally, just a little glimpse or a conclusion. Day trading, it's if you want to be looking at the charts a lot of times per day, or if you want to take advantage of quick moves on lower time frames. Swing trading is if you want to catch moves based on fundamentals and technicals at the same time, because you need to be up to date with economic situation, with what the Fed is going to say. For example, with the US 500, when the Fed said, recently that they're going to start hiking rates even more, the market just started dropping, right? It just started dropping. And it was a very simple cue or clue that the Fed actually gave us that the market is going to move down. So what I would do in that situation, I just get in there, I'm looking at the news, I see that the news happens, and then I'm like, okay, I'm going to gauge into a swing trade right about now, but I'm gonna find a good entry based on the lower time frames so I can make the best possible risk to reward ratio. So you would wait for somewhat of a head and shoulders or something to form before entering a potential short position. So that's pretty much it for today's video. I hope you guys enjoyed it. Make sure to drop a like, subscribe to the channel, drop a comment down below with your favorite thoughts and opinions. And lastly, I'm not a financial advisor, and you should do your own due diligence before investing into anything in the crypto, NFT, or blockchain world. So thanks for watching. I'll see you guys in the next video.